Imagine that you are at the market, ready to pay for your purchases, but instead of taking cash or swiping your card, you use Bitcoin. Does it look like something from the future? Well, know that this reality already exists. But this raises a big question. Can Bitcoin really be considered real money, just like the real or the dollar? Or is it just a speculative asset, as they say? Today, we will compare Bitcoin with traditional currencies, understand their differences, and see if it can, in fact, replace the money we use on a daily basis. So I'm here once again to talk about this subject and answer some questions from newbies. For those who don't know me, here is Oliver, a person passionate about Bitcoin. And if you like this subject like me, start washing your dishes, do your exercises, or just get comfortable because another Bitcoin Now video is starting. What defines something as money? Well, money, in the end, is anything that people widely accept as a medium of exchange. But it doesn't stop there. For something to truly be considered money, it needs to fulfill three basic functions: be an efficient means of exchange, a reliable store of value, and a unit of account that allows you to measure prices and values of goods and services. Now, does Bitcoin fit into this? It depends on the point of view. As a medium of exchange, it still faces challenges, because, despite being accepted in many places, it is not something universal like the dollar or the euro. Not to mention that transaction fees and time to confirm payments can be a problem in some situations. But, at the same time, its acceptance has grown, and with solutions like the Lightning Network, this barrier has been decreasing. As a store of value, it divides opinions. Those who believe in Bitcoin see it as digital gold, something that cannot be inflated because it has a limited supply of 21 million units. But its volatility still makes many people turn up their noses. After all, an asset that can lose 30% of its value in one day can be risky for storing wealth in the short term. On the other hand, those looking at the long term see that it has consistently appreciated in value over the years, especially compared to fiat currencies that lose value with inflation. And as a unit of account, that's where he fails most at the moment. Few people price products directly in Bitcoin, and most transactions are still done by converting to dollars, reais, or euros. But that doesn't mean this can't change in the future as Bitcoin usage becomes more common. So, is Bitcoin money? Technically, he might be, but in the real world he's not quite there yet. It already functions as a medium of exchange for some, is a store of value for many, and may one day become a viable unit of account. But like everything in the world of finance and technology, this will depend on adoption and the changes that are yet to come. The idea that something needs to be issued by a government to be considered money is a view that makes sense when we look at the traditional financial system. For as long as we can remember, the money we use on a daily basis, such as the real, the dollar, or the euro, has been controlled by central banks and governments, which determine its issuance and regulate its circulation. But that doesn't mean that's the only way something can become money. If we go back in time, we will see that money has existed in various forms. Before metal coins and banknotes, people used salt, shells, and even huge rocks as a medium of exchange. What made these things work like money wasn't a government saying they were worth something, but rather the fact that people trusted them to exchange goods and services. And that's where Bitcoin comes in. Even without a government behind it, it has all the characteristics that make something considered money. It is scarce, divisible, portable, and difficult to counterfeit. But what really gives Bitcoin its value is the fact that millions of people around the world trust it as a way to store and transfer value. And unlike traditional currencies, which can be inflated when governments decide to print more money, Bitcoin has a limited supply of 21 million units, making it a type of money that no one can manipulate. So, even if it is not issued by a government, it can be considered money for the simple fact that more and more people use it and recognize its value. In the end, what defines money is not who creates it, but rather the trust that people have in it. And Bitcoin, in a decentralized way, has gained this trust in a way that no other currency has done before. Do you like crypto and want to stay up to date? Leave your like now. This helps the channel grow and ensures you never miss out on the hottest news in the crypto world. Join our community and stay ahead. And the question that many people who don't understand Bitcoin ask is, can you use Bitcoin to pay for things on a daily basis, just like the dollar? You can use Bitcoin on a daily basis, yes, but the experience is still very different from paying with a dollar or any fiat currency. The great charm of Bitcoin is that it is a decentralized digital currency, which means that it does not depend on a bank or government to be transferred or stored. But when we talk about using it as a common form of payment, as we do with traditional money, there are still some barriers. First, Bitcoin is not accepted everywhere. Although its adoption is growing, many companies and merchants are not yet ready to accept Bitcoin payments, either due to a lack of knowledge or the fact that transactions can still take longer and involve higher fees, depending on the network. Even so, there are already a range of places, both online and in the physical world, where you can pay with Bitcoin, especially in sectors such as technology, tourism, and even some food services. Another point is that the price of Bitcoin can be very volatile. This means that if you pay for something today with Bitcoin, the value of the currency can change drastically by the time the merchant converts the value to a traditional currency. For those who receive Bitcoin, this can be a risk. For those who pay, this can be an advantage or a disadvantage, depending on price fluctuations. So while it's completely possible to use Bitcoin to pay for things on a daily basis, it's still not as practical as using the dollar or other currencies, simply because acceptance isn't universal and the payment experience still has these little hiccups. However, with time and increased adoption, perhaps Bitcoin will become as simple and common an option as any other form of payment? The real and the dollar are controlled by central banks. How does Bitcoin work without one? It is true that the real and the dollar, as well as other traditional currencies, are controlled by central banks. These banks are responsible for regulating the amount of money in circulation, controlling interest rates, and ensuring economic stability. They do this through monetary policies, such as printing more money or removing excess money from circulation when necessary. This gives the government and banks great power over the economy and confidence in currencies. Now, Bitcoin is very different, because it does not depend on any central bank or government institution to function. Instead, it is based on a technology called blockchain, which is a kind of public, decentralized, and immutable ledger. Instead of a single bank or entity controlling Bitcoin, the entire network of computers participating in the blockchain does the work of verifying and recording transactions. These computers are called nodes, and they operate independently, but they all follow the same rules defined by the Bitcoin protocol. The great thing about Bitcoin is that it does not need a central authority to guarantee its security or integrity. Trust is decentralized and comes from the fact that the network of users and miners work together to ensure that all transactions are legitimate. The supply of Bitcoin is also controlled by a predefined code, which limits the quantity of Bitcoins to 21 million, making it a deflationary currency, unlike traditional currencies, which can be inflated by printing more money. In other words, without a central bank, Bitcoin works through the trust that people have in the decentralized system and the transparency of the blockchain. Each transaction is validated by network participants, and no one has the power to change the transaction record or create new Bitcoins in an unlimited way. This is what makes Bitcoin work without the need for a central authority, but at the same time, this also makes it more vulnerable to market fluctuations, as there is no entity controlling its stability. What is the difference between dollar inflation and the limited issuance of Bitcoin? The difference between dollar inflation and the limited issuance of Bitcoin is in the control over the supply of each of these currencies. The dollar, like all fiat currencies, can be issued at any time by the government or central bank. When the economy needs stimulus, the government can simply print more money, which increases the amount of dollars in circulation. This is what we call inflation. When there is more money in the market, but the number of goods and services remains the same, their price tends to rise. In other words, the purchasing power of the dollar decreases because there is more money competing for the same resources. This is something that governments can control by adjusting money issuance as needed, but it is also a double-edged sword, as if money is printed in excess, inflation can rise out of control. Bitcoin, on the other hand, doesn't work like that. Its supply is limited by design, with a maximum of 21 million Bitcoins that can be mined. This feature means that there is no risk of a government or central authority printing more coins. Bitcoin supply is predictable and transparent, and new units only enter circulation through a process called mining, which is decentralized and works on predefined cycles. As a limited currency, Bitcoin is often compared to gold, because of the scarcity that guarantees its value over time, something that is difficult to be changed by any external event, such as the need for an economic stimulus. So, while dollar inflation happens when the government decides to increase the amount of money in circulation, Bitcoin follows a fixed issuance rule, where the amount of coins available on the market is limited, which helps protect its value from inflation in a more rigid and predictable way. The limited issuance of Bitcoin is seen by many as an advantage, as it offers protection against the loss of value that affects fiat currencies like the dollar, especially in times of economic crises. Is Bitcoin safer than traditional currencies? Can it be confiscated or censored? Bitcoin is considered by many to be more secure in certain aspects compared to traditional currencies, but this largely depends on how we define security. When we talk about security in the sense of protection against fraud or counterfeiting, Bitcoin has a clear advantage. It uses blockchain technology, which is extremely difficult to change without the entire network noticing. This means that once a transaction is recorded on the blockchain, it is virtually immutable. Additionally, Bitcoin transactions are protected by state-of-the-art encryption, which makes it nearly impossible for someone to steal funds from a wallet, as long as you take proper care of your private key. However, in terms of security in the sense of protection against the government or other authorities, Bitcoin has its particularities. One of the great advantages of Bitcoin is that it is decentralized. This means there is no central bank or financial institution controlling it, which makes it much more difficult for governments or corporations to interfere directly. There is no bank account in Bitcoin, for example, that can be frozen or confiscated in the same way as money in a traditional bank account. Full control over your funds is in your hands as long as you have access to your private key. On the other hand, this can also be a double-edged sword. Although Bitcoin is decentralized and more difficult to censor in many ways, it is not completely immune to control or intervention. For example, if the government wants to ban the buying and selling of Bitcoin or force exchanges to block transactions, they can largely do so, as Bitcoin still relies on exchange platforms, which may be regulated or even closed in certain countries. And although Bitcoin cannot be confiscated directly like physical money, if someone accesses your private keys, they can steal your Bitcoins without leaving a trace. In short, Bitcoin offers robust security against fraud and counterfeiting, and can be more difficult to confiscate or censor compared to traditional money, especially because it does not rely on a central authority. But like any powerful tool, it requires full responsibility on the part of those who use it, and security depends largely on how you protect your private keys and ensure that your interaction with the Bitcoin ecosystem is done safely and conscientiously. If you want to dominate the world of Bitcoin and always be up to date with the latest news, subscribe to the channel now. By subscribing, you not only support our work, but also guarantee access to exclusive content and tips that can transform your crypto journey. Don't miss any updates. Join our community of investors and always stay one step ahead in the Bitcoin universe. If Bitcoin were real money, why do so many people still prefer to convert it to dollars before spending? When we say that Bitcoin is money, we need to understand that it is still in a maturing process, and its acceptance and usability as an exchange currency are still limited. Even though Bitcoin has become a type of digital gold, with a great potential for appreciation over time, the reality today is that many people still prefer to convert it into dollars, or other fiat currencies, before spending, and this occurs for some very specific reasons. First, the main reason is Bitcoin's volatility. The price of Bitcoin can vary greatly over short periods of time. For example, if you buy something today with Bitcoin and its price drops drastically tomorrow, the value of what you paid would in practice be higher in dollar terms, as the amount of Bitcoins used to make the purchase would have lost value. Unlike the dollar, which has much more controlled and predictable fluctuations due to government's monetary policy, Bitcoin is still experiencing a roller coaster of prices. This volatility makes Bitcoin a riskier asset for those who are thinking about using it for everyday transactions, especially for those who are unfamiliar with the crypto market and do not want to run the risk of losing value so quickly. Furthermore, there is the issue of adoption. Although Bitcoin has gained a lot of prominence and is already accepted by some companies, it is still not a widely accepted currency in everyday life. Many people may even have Bitcoin, but if the merchant or service they want to pay for doesn't accept it, the solution is to convert it to a traditional currency, such as the dollar. And even among places that accept Bitcoin, some require the transaction to be converted to fiat currency immediately because they don't want to expose themselves to Bitcoin's volatility. This means that, in practice, the functionality of Bitcoin as a payment method still depends on conversion to traditional currencies in many cases. Another factor is familiarity and trust in traditional currencies. The dollar, euro, and other fiat currencies are already very consolidated and are strongly integrated into global financial systems. People know exactly the value of the dollar and what it can buy. Additionally, fiat currencies are backed by governments and central banks, which provides a level of trust that Bitcoin, being decentralized and not controlled by a central authority, is still struggling to achieve. Even with all of Bitcoin's benefits, many people feel they are safer with a currency that has a more traditional and well-known support structure. Finally, we have the issue of tax advantages. In many countries, Bitcoin is seen more as an investment asset than a currency for everyday transactions, and therefore, people end up using Bitcoin more as a form of savings or speculation. This may also be a factor that motivates many people to convert their Bitcoin to dollars or another currency before spending. In some cases, people may even delay spending Bitcoin to avoid tax or taxation issues that may arise depending on how local laws treat the currency. Therefore, although Bitcoin is considered a form of digital money and has characteristics that could make it viable as a means of payment in the future, it still faces these obstacles. volatility, lack of widespread adoption, trust in fiat currencies, and even tax issues. These factors mean that many people prefer to convert Bitcoin into dollars or another more stable currency before making a purchase. Over time, as technology evolves, more merchants accept Bitcoin, and volatility decreases, we may see Bitcoin becoming a more common and reliable form of payment. But for now, it is still treated as an asset of value more than an everyday currency for purchases. Can Bitcoin replace traditional currencies in the future? Would governments allow this? When we think about the future of Bitcoin, it is impossible to ignore its enormous potential to transform the global financial system. Bitcoin has several features that make it a solid alternative to traditional currencies. Because it is decentralized, without the need for a central bank or government controlling its issuance, it offers unique freedom and is immune to inflationary monetary policies that can devalue fiat currencies, such as the dollar. Furthermore, the security of transactions, guaranteed by blockchain, and its transparency are great attractions for those looking for a safer and more efficient currency. In terms of functionality, Bitcoin has a lot to offer. Its blockchain technology ensures that transactions are carried out quickly, securely, and without the need for intermediaries, which can reduce costs and increase efficiency in many financial processes. While volatility is still a factor to consider, many people believe it will decrease over time as Bitcoin adoption increases and it becomes more widely accepted. We have already seen, for example, companies like Tesla and large financial institutions starting to get involved with Bitcoin, which strengthens confidence in its long-term viability. When we think about the future, Bitcoin has a clear advantage. It offers a form of protection against the inflationary monetary policies that governments implement, especially in times of crisis. In a scenario where traditional currencies can be devalued by excessive money printing policies, Bitcoin, with its limited supply of 21 million units, serves as a much more stable store of value. This becomes increasingly important as we see economic instability in many parts of the world. As for governments, although Bitcoin adoption is still a challenge in some regions, we are already seeing positive signs. Countries like El Salvador took a bold step by adopting Bitcoin as their official currency, recognizing its potential to transform the economy and promote financial inclusion. Furthermore, many governments and financial authorities are beginning to understand that the adoption of cryptocurrencies may be inevitable and that, instead of resisting, they can begin to adapt to this new reality. Smart and balanced regulation can ensure the stability of the crypto market while allowing Bitcoin to continue to grow. It is also important to remember that the adoption of Bitcoin is growing by leaps and bounds, with more people and companies beginning to integrate it as a form of payment. This, in itself, already demonstrates that we are heading towards a future in which Bitcoin can coexist harmoniously with traditional currencies. What we see is a process of gradual adaptation, where Bitcoin increasingly becomes an integral part of the global economy. In short, Bitcoin has all the conditions to replace, or at least coexist, with traditional currencies in the future. It offers a safer, decentralized, and resistant alternative to inflationary monetary policies. Over time, it is quite possible that volatility will decrease, adoption will become more widespread, and Bitcoin will establish itself as a global benchmark currency. Governments, instead of opposing them, will have the opportunity to adapt to this new digital era, ensuring a more inclusive, transparent, and efficient financial system. The future of Bitcoin is promising and could, indeed, bring a true revolution to the global financial system. What happens if Bitcoin becomes the world's main currency? If Bitcoin becomes the world's leading currency, it would mean a radical transformation of the global financial system. Although it still seems far away, the impact would be profound in many areas, and some of the most notable effects would likely be positive. Firstly, Bitcoin, being decentralized and based on blockchain, eliminates the need for intermediaries, such as banks and governments, to process transactions. This can make the financial system faster, more efficient, and more accessible. With Bitcoin as a global currency, transactions could be made directly between people, more cheaply and without the traditional fees we are used to seeing in banks. Another important benefit is transparency and security. The Bitcoin blockchain is immutable, meaning once a transaction is recorded, it cannot be changed. This offers a level of trust that traditional currencies, with their centralized structures, cannot yet achieve. Furthermore, Bitcoin's nature of being a currency with a fixed supply of 21 million units provides protection against inflation that many fiat currencies, such as the dollar, do not offer. This is especially relevant in times of economic crisis, when governments tend to print more money to try to stimulate the economy, which often leads to the devaluation of currencies. With Bitcoin, this threat is minimized. which could help maintain greater economic stability in the long term. If Bitcoin becomes the main currency, it would also mean greater financial inclusion. Millions of people around the world still lack access to banking services, especially in developing countries. Bitcoin, as a digital currency accessible to anyone with a smartphone and an internet connection, could provide a way to integrate these people into the global financial system, allowing them to participate in economic transactions in a way previously unthinkable. This could reduce financial inequalities and help create a fairer and more inclusive financial system. However, such a large transition would also bring challenges. The main concern would be the adaptation of governments and central banks. Monetary policy control is an important tool for governments as it allows them to regulate inflation, adjust interest rates, and stimulate or slow the economy as needed. With Bitcoin, governments would lose this control, as it is decentralized and cannot be manipulated by a central authority. This could create uncertainty in terms of economic policies, and many governments could initially resist this change, preferring to maintain control over their own currencies. Furthermore, the issue of scalability would be a challenge. Bitcoin, despite being a revolutionary technology, still faces limitations in terms of the volume of transactions it can process quickly and efficiently. To become the world's main currency, it would be necessary to improve the infrastructure and technology behind Bitcoin to handle large-scale transactions, something that traditional financial systems can already do with ease. Overall, if Bitcoin becomes the world's leading currency, we could expect a more transparent, secure, and inclusive financial system. Decentralization could bring more economic freedom to people, especially in countries where inflation and financial instability are common. However, there would also be significant challenges, especially with regards to adapting authorities and improving the technological infrastructure needed to support the global adoption of Bitcoin. Still, it's fascinating to imagine a future in which Bitcoin plays a central role in the world economy, ushering in a new era of financial freedom. Don't stop here. Click on the video that appears on the screen now and continue your journey in the Bitcoin universe. Learn more, discover valuable tips and gain knowledge that can transform your view of the crypto market. Let's go together, always one step ahead.